Okay, guys, today we have on Vlad from Lighter, probably one of the most hyped, maybe the most hyped project right now. I've had a number of Perp Dex founders, people on as of late. This is sort of the most exciting project, perhaps, in crypto right now. It's getting a lot of talk. Vlad, welcome. I want to ask you, you started as an AI company, you pivoted into building a Perp Dex, and it has captured a ton of attention, a ton of volume, a ton of users. Have you been personally surprised at the hype? Like, how have you, coming from trading where I think you're probably pretty compartmentalized, you don't have a lot of public facing interaction. Have you been like, wow, like this is a complete change for me personally?
Yeah, it's definitely different from trading. And by the way, thanks for having me.
So I jumped right into it.
Yeah, I feel like we've talked to on X for a couple months about getting something going, so it's great to finally be on. But I mean, I think you're right on that, but I guess for me, like, I kind of took like a pretty circuitous path to get to here, like from trading. Then I went to Silicon Valley, and actually, like, the first company I was at was a consumer internet company called Quora, right, where I started the machine learning team.
Yeah.
We had like when I joined, we had around 1 million users, and then that was in the tens of millions by the time I left. So there was a lot of stuff like, it is very different. Like in trading, you're just building an application for like a small team to use and trade in the markets, and that's that. Versus like having something where you have, you get feedback from like thousands of people every day it's pretty different. And I mean, I guess when like the added level of transparency when you're building in crypto, right, it's like you're building in public, that adds a whole nother layer to it. So that part is new, but just as far as like the experience of like building something, getting tons of feedback and tons of engagement, I mean, I think mostly positive, but some FUD as well. I think we were pretty pleasantly surprised by like the overall growth this year. Like I think the internal metrics we had for where we wanted to be by December, like I think we hit those metrics like in July. So I think it's been great to see that the community adoption has been strong.
Yeah. On that note, okay, so obviously you guys have been building for a while, but Hyperliquid certainly kicked off this, I would say, well, first of all, their airdrop and like rewarding early users, but it's really kind of kicked off a Perp Dex season, as you've seen. But there's like a ton of Perp Dexes competing right now, and Lighter's consistently near the top, right? Between Hyperliquid, Lighter, and then Aster, and you can sort of draw your own conclusions about Aster, but like you guys have been now consistently at the top, but there are a ton of new Perp Dexes. I've talked to the girl from Ostium, Kalidora, hoping I'm remembering that correctly. I talked to last week Ruslan from Extended. There's a lot of projects building right now. Lighter has been, again, near the top. How do you think that you guys set yourself apart, right? Like, of course, there's these points farming campaigns. Like, everyone's doing it. There's incentives. Like, everybody understands the game. But at the same time, like, what sets Lighter apart, at least from a high level, from your perspective?
When we started building, that was 3 years ago, right? And so I think that's important to remember, because there were a lot of competitors then too. I mean, it was kind of a different market then. And I guess, we're not necessarily just thinking of it in terms of perps. Like that is a product with very strong product market fit, so it made sense to start there. But now we've added spot, and I mean, I guess like when we first started out, we had essentially like 5 goals, right, which are like low cost, low latency, secure, verifiable, and composable. And so I think like it took us a while to build the initial tech, right? Like about 18 months. And then we were in testnet, and then the private beta, and, last 3 months kind of public mainnet. But I guess throughout all of that, like we kind of stayed the course with those 5 goals. And I think we've achieved all 5. There's on the composability part, there's still more to do, obviously, and we can talk about that as far as like how Lighter will compose with the rest of DeFi and Ethereum. But I think like it is very low latency. It is on top of Ethereum, like everything that happens on Lighter, every order, every cancel, every liquidation, there's a proof of all that. So while I think there's some very worthy competitors, and it's good, right? Like I think if you're building in a space without competitors, like it's probably not a space with a lot of customer interest to begin with, right? So like I think it's great to see that there are competitors, and we're learning from some of those products. Like you mentioned Ostium, like I think I think they showed that there's some real appetite for real world asset perps, and as an example, right? So yeah, so anyway, but that being said, I think we're the only product in the market that is kind of strong across all 5 of those dimensions that we set out with. So kind of from our perspective, we built what we set out to build, and now there are a lot of trends, right? Like as far as adoption of DeFi in general, and with kind of a better regulatory climate, and just a lot of like folks on TradFi finally being comfortable with DeFi. Like I think there are a lot of really strong trends that we hope to be part of as DeFi grows.
Yeah. You mentioned the regulatory clarity, or hopefully more regulatory clarity going forward. What has been your experience in this domain? Obviously, trading applications take on probably, some more oversight, some, I think there's crypto, and then there's also crypto and exchanges, and like all of these are like, right, maybe we're moving in the right direction, but what has been your experience thus far? I don't know if you've talked with policymakers, like what direction are we headed in? Like, and you obviously being a builder, being a founder, a lot of things that I think we're building now 5 years ago would have been, I think people would have been petrified to build, or they, would have been shut down immediately in some capacity. It does seem like we're maybe moving in the right direction, but have you had any like, obvious kind of moments where you've seen, okay, like this is getting better? And what discussions that maybe you had with policymakers or regulators or lawyers or whatever it may be?
Right. Yeah. I mean, I think the conversations are a lot more substantive now, right? I think like, and we weren't in the space 5 years ago. I mean, we followed it pretty closely, but I think to some extent, we, kind of starting when we did, there's a bit of an advantage in the sense that we don't have like some of the battle scars.
Yeah.
That the folks who are really early, and, we kind of like, we're thankful that others have been through that. But like, I think now the conversations are a lot more substantive, because I feel like before it was like, there was like one camp that was like, like 100% like libertarian, like there should be no rules for any of this stuff, is just code, kind of like that kind of perspective, which I think certainly like, like that logic applies to a lot of the, what's been built, like Ethereum, right? Like, like I don't think there's no conversation now about like regulating, Ethereum. Right. It was like before there were others on the other side who were like, okay, all of this stuff should be regulated in exactly the same way as TradFi. So I think now the conversations are a lot more around the details and kind of the right language. Like we spent some time with policymakers, and yeah, it's been impressive, like the level of understanding. Like I think probably people remember, like this is a different domain, but like a couple of years ago when when Mark was in DC talking about Facebook, right? And some senators were like, wait, how does Facebook make money? Like, we don't understand, right? Whereas like, there's none of that kind of like, wait, what's Bitcoin again? It's more like, okay, like, I don't know, like one of the questions we got was like, okay, so if like zero knowledge proofs can establish some kind of, like you can do some kind of on-chain identity. Well, like who, where's that data stored, and how's the proof generated? Like the questions were much more to the point about the details of some of the stuff. And like, I'll give you an example, right? Like, let's say for an institution to trade on Lighter, how do you make sure that, like, let's say there's an institution that is subject to regulations that, they can only trade with certain types of counterparties. So how do you make sure that you can do that while not fragmenting liquidity and while allowing the rest of the protocol, other participants who don't have those restrictions to trade with each other, right? So like, I think with zero knowledge proofs, for example, you can actually achieve all of that. If it, so it's not just, you don't want to just kind of copy and paste rules that were designed 60 years ago in TradFi. But with trading, there are some like common sense things that you do that I think most people in the industry would want anyway, right? Like being able to have some, you want institutional adoption, but you also want to have the protocol kind of operate in a way that doesn't fragment liquidity.
Yeah. I wanted to ask about like slightly along this vein, like in terms of verifiability, openness, transparency. I don't want to get too much, like I mentioned before. I think the whole ADL debate is, well, first of all, a lot of it's over my head to begin with. So, but it also seems kind of like, hashed out at this point. But one point that I heard Tarun making on the podcast you did was that one nice aspect of Hyperliquid, for example, is that at least when it comes to these, like this ADL discussion, you can see that people were being ADL'd, right? You can actually look and see maybe like longs being closed, and there's some verifiability there. A lot of Lighter's, sort of thesis and narrative has been around, one, this idea of ZK circuits, which you're going to have to explain to me, and then also just like the openness and transparency. I asked this question last week to the guy from Extended, but I'm curious, in your mind, when it comes to building a DEX, what are the critical parts that need to be on chain? What do we, users or the professional traders, institutions, what do they need to be able to see and verify themselves? Maybe not with a node necessarily, but on a block explorer. Like what are those critical aspects? Like when you're building Lighter, what do we, what is the verifiability part? Like where is that important?
Right. Well, so I think when we first started building, right, like the narrative was around decentralization, and I think what we realized, right, is like the actual thing you're trying to solve for is verifiability, right? Like it's not about like, are you running 5 nodes or 10 nodes? Like that's not necessarily the thing, right? It's like, is every step of the process verified, right? In a way that it could be done through, there are different ways to do that. Or it could be done through consensus type mechanisms. It could be done using, you could build on something like, let's say like Arbitrum, like optimistic rollup, or in our view, like the best approach to a lot of this is using zero knowledge proofs, which you can use them for privacy, but the main thing we use them for is scalability, right? So you can kind of prove that like tens of millions of trades all happened correctly, or hundreds of millions of orders were all matched correctly without having to post all of that directly on Ethereum. You're just posting proofs of kind of batches of those trades. And it's like if a single order that went into Lighter was not matched correctly, then like the proofs would be rejected, right? Because the ZK circuits define the rules of the marketplace, as far as like time, price, priority, like how liquidations work, how transfers work, like all of that is defined in the circuit. So if one thing goes wrong, right, like it could be that 1 out of 100 million orders was processed a second later. It could be that, or it could be that, like, I don't know, someone tried to transfer all their someone else's wallet completely to them. Like it doesn't matter how big or small, like all the rules have to be followed for the Lighter L2 to be able to communicate with Ethereum, right? And so if that's not the case, then you have to, no, sometimes it's like the code, especially as we first built it, right? Like sometimes there may be just like actual bugs in the code, right? So it may take a couple hours to solve that, and then you try again. And so that's why like there's some period, like grace period for that, right? But if like, and if over like let's say like over a week, like let's say the system became corrupted for some reason or manipulated or something like that, right? And over a week, there's no correct proof, then customers can just get their assets out through Ethereum. So that to us, like that's a really important guarantee. And we think that platforms like, or for example, like L2B, right, that kind of like classify how different L2s work. Like we think those are kind of good, or other platforms that whether it's auditors, right, or platforms like DeFi-Llama or Artemis, like all these are like kind of good, like neutral, platforms to look at how protocols work, and like it shouldn't just be up to us to say, well, we're verifiable, right? Like this stuff should be, yeah. It's like Bitcoin, right? Like most people who use it don't necessarily know exactly how it works, but they do know that if something broke, it will be public, and everyone, enough experts would know that something went wrong. Obviously, nothing has broken with Bitcoin, but like people who use it know that because it's, the way it works is public. Like it's enough for like one expert to find a mistake. So the same thing with us, right? Like the ZK circuits, like does every trader know exactly how they work? No, right? But
I don't know if any of them do.
Yeah. Well, some actually, you'd be surprised. Like some of the algorithmic, like we have, I guess at this point, like close to 1,000 like trading shops that we have been in touch with, and like some of these algorithmic trading shops actually know a lot of the details of how the tech works, and we were actually surprised by that. But yeah.
Okay, you mentioned something again in this podcast that I heard you do recently, and it was the first time I heard you say this. You were talking about this kind of like sidecar protocol where you're hoping to bring on applications, and I think your rationale seems pretty logical in the sense like we don't necessarily need to build lighter lend or our own applications, but what we can do is bring on teams that are already building like and are already have some traction, product market fit. So Aave, Morpho, like Uniswap, like I don't know, I'm naming randoms right now, but just that this new kind of like sidecar protocol would be able to share the sequencer with Lighter. I think this was one thing that when you talked about earlier, I was a little bit, I don't want to say skeptical, but I just didn't know exactly what you were talking about when you were mentioning composability. I think that this idea of being composable with the Lighter sequencer is how I've usually understood it, right? And like when this is kind of like a bit of a bastardized term at this point when we talk about composability, because I think some people have a definition that differs from others. But with regards to like bringing on new applications, is that sort of the next step? And like, what does this sidecar look like? I mean, because right now you guys are functionally a layer 2. I, again, don't want to get too far into definitions because you get people screeching, but you're a layer 2 on Ethereum. Is this like the composability that you're talking? What does this kind of like sidecar thing look like in your mind? Or like, how are you developing it maybe?
Right. So, it'll come incrementally, right? Like I think that maybe there's some confusion in terms of like, sometimes the conversation is about like what Lighter can do right now. Sometimes it's about like what we're releasing in the next month or two. And then sometimes it's more about like the long-term vision, right? And but just to kind of bring it all together, right? Like the long-term vision is that, any asset on Ethereum can be collateral on Lighter, right? So now that, how do you get to that? For like those assets they're not necessarily just people holding ETH, right? A lot of them are part of some existing protocol like an Aave, or Morpho, stuff like that, right? So like as the first step, you want those protocols to be able to exist on Lighter itself, right? On the L2, then you can think about what are smart ways to kind of bridge back and forth, and then so some of the first applications we expect to be built on the Sidecar would be things like Layer 0, right? Would be like Circle, right? So there'll be kind of a native USDC
issued,
issued, right? So that that's another application. Now the lending applications are important because if you want to do stuff like basis trading, right? Like you need some form of lending market there, right? And so that's that's another one, right? But also stable coins, right? Like right now, we'll already mentioned Circle, right? But like, let's say that other stable coins wanted to be on Lighter, like you need the sidecar for that, because like a stable coin developer isn't gonna, like they're not gonna spin up a ZK development team. Like they already have, it's much easier. They already have their existing smart contracts on Ethereum. Like those kind of just work out of the box on Lighter. That's what the sidecar will allow. So then you can start doing things like, universal cross margin, right? Initially with stable coins, but then later with other assets as well. But if we move from that to like the longer term vision, you can kind of think about like tokenization, right? Like imagine that a position on Lighter can become tokenized and then kind of bridged back to Ethereum, right? And then you can actually just like imagine that someone can just like buy into an LP position or like some other trading strategy without even having to go on Lighter, right? Like just as just like an asset on Ethereum, right? So that's again, some of that stuff may be like a year out, but that's the longer term vision. I think initially, we'll implement the sidecar. We're going to have some initial developers who would come on board there, and that would allow functionality like like bridging, native USDC, other stable coins, lending, and then we'll go from there.
Yeah. Okay. You guys also launched Forex trading. How long ago is that? Like about roughly a month ago now. I think, well, I was looking and there's a lot of volume. Have you been surprised by it? Also, who's trading Forex? Like, okay, so look, I'm going to be the first to say that there's points farming going on. So we can, decide how much of, all of these perp DEXs, right? Like it's very hard to know how much of it is like really like sticky versus points farming. So I'm just going to qualify with that. With that said, I was pretty surprised at how much trading of Forex there is. Like where is this coming from? And do you think that this is like is this the next step into bringing Forex on chain? Like this is something that we've talked about forever, right? And now, it seems like I don't know this for a fact, but I haven't seen nearly as much volume anywhere else as I've seen on Lighter in like the past month. So like something's working, right? Like what's behind this?
Yeah, I mean, I think right now it's like, we have the perps there, and they're, I think it's a good product, right? You can trade at leverage. It's zero fee for retail. Like, I mean, I think that there are like Forex traders in general, right? Like if you like, I think there are retail traders of Forex, especially in different countries where they want to. I mean, I guess I don't. We haven't. I wish I had a clear answer on this as like how much of it is speculation versus hedging, right? I think we haven't really had time to like dig into that data. We've just been pretty heads down. I think that's certainly an important question. And I guess to your point earlier, like this data is on chain, like other analysts could take a look at that. I think it will be interesting once there's like spot versions, right? Like imagine there was like a euro stablecoin or other stable coins like that, and you could trade like the spot versus the perp, like that'll start to because I think right now it might just be a lot of just like speculation, right? Like just people betting on currencies, which is good. I mean that is a real use case, but I think if it's something where there's the spot and the perps and the basis trade can happen on chain, like that is I think how it starts to become more part of like like useful to institutions, right? And useful to like corporations who hold a lot of currency. So we'll see how that goes. We're talking to folks like like Circle about that kind of longer term.
Yeah, it's interesting. I was actually quite surprised to see how much volume is being traded in Forex. So what's next on the roadmap? You've launched Spot ETH, or to the extent that you could talk about it. You've launched Spot ETH now. The next is I would assume other spot assets. I would also, correct me if I'm wrong here, but like I assume it's much easier to bridge because there's a native bridge to bridge ETH, and then something like Bitcoin, right? Like it needs to be functionally wrapped in some capacity in order to be bridged. Is that correct? And then yeah, so like what's next on the roadmap? We know spot ETH now, and then going forward.
Yeah, so for Bitcoin, there's a team we've been spending some time with called Citria.
Oh, I know
that's
them,
kind of working. Yeah, so we are like looking at ways to leverage, their tech for, Bitcoin integration that kind of uses ZK as opposed to, I think like most other implementations are more kind of like multi-sig based.
Yeah.
So I think there's something really interesting there, but yeah, roadmap wise, it's adding more real world assets, right? Like I think tokenized stocks is a big one. I think starting to look at options is something else that we're going to do next year. And then I think like fixed income, right? Like, so we have some commodities, we have FX, right? We have, some of the stocks already, there's more there, but I think a big one is fixed income. And that can be particularly interesting, like to institutions. So yeah, I mean, I think a lot of this will be driven by like the specific, okay, like do we do options first or do we do, fixed income first? I think like as far as the tech is concerned, both are kind of similar amounts of technical lift. So it'll really come down to like what the customers are saying, and also other things like, back to the point about like regulation, if kind of what the pathway to US markets looks like, right? And, it would be pretty cool, right? Like if you could just buy US treasuries directly through DeFi, right? Like, but something like that is, there's a lot that goes into that, right? But that would be pretty massive once you can do it.
Let me take a moment to talk to you about Ellipsis Labs, a team I've known for a while building some of the most interesting products in the space. The Ellipsis team is one of the few that I can consistently point to and say, these guys really know what they're doing. They're backed by Paradigm, Electric Capital, and Han Ventures. The founders, Eugene and Jerry, have experience at Citadel, Jane Street, and the Solana Core team. Since launching their order book DEX, Phoenix, they've done over $80 billion in trading volume by making on-chain order books competitive with centralized exchanges. They are also the team behind Gavel and SolFi. I would consider them the foremost experts in crypto market microstructure. The best part is Ellipsis is hiring for New York-based engineers. Work with a small, focused team who are results-driven, collaborative, and use a modern stack. If you're an engineer who wants to work on infrastructure that's already proving itself in the market, go to ellipsislabs.xyz. Okay, now back to the show.
Okay, now let's get into what I think everyone is most excited about, or maybe I'll tell people to skip to this section now. So I want to talk to you about just broadly the economics behind Lighter. So you launched Perps, and at least from user adoption, it has the no fee model. This has been the most successful no fee model Perp DEX thus far, but by like some order of magnitude. There's a lot of discussion around this, right? Like I'm sure on Twitter every day you see people screeching back and forth. Is this sustainable? Like how are they going to monetize? So on and so forth. Talk to me about just first and foremost, like, and I kind of heard you answer this question, but now for this audience, like, do you feel that no fees is the path going forward for trading perps, but then also like you have 0 fees on spot as well? So like, is this just the path going forward for trading? In DeFi specifically, obviously, right? Like this already exists in Robinhood, and functionally this exists on most other kind of TradFi front ends.
Right. Yeah, I mean, I think philosophically, it always made sense to us to do that. I think that there's like different ways to think about it. Like one lens is just like, democratizing finance, right? Another lens is that you can actually you actually expand the market, right? Like strategies that wouldn't be, right? Like it's like, if you remove friction from the market, that expands the set of strategies that are there and the number of traders that can be there. So kind of the net kind of economic value of all the activity would actually be higher. And you can always kind capture the value from the other side, right? Like from the like usually like right, like the trades, it's like it's pretty rare that there's a trade where it's like a retail trading against retail, right? Usually it's like,
Yeah.
If retail is on one side, then professional trading shop is on the other side, and a lot of times it's actually trading shops, you know, trading with each other too, right? And so like even if you have a view of like, well, this will all just you know, like the cynical view is like, well, this just means like spreads will be higher, right? But that's the extreme. That's like the worst case scenario of what can happen. Like
Yeah.
in the case where the market expands, there'll be other trading shops that come in and narrow the spread. But if the worst thing that'll happen is like status quo, but just that instead of a fee of a higher spread, that's actually the same as like what already happens on other platforms. And then we've actually shown, I think already, that you will actually have tighter spreads too, because there's just going to be a lot of competition among trading firms that come in. So we think it's just like better, right? It expands the market. And even in the worst case, it'll like the worst case is going to look like the status quo, and the best case is going to look like Robinhood.
Yeah, I think, okay, so I'm going to tell you first of all, I need to qualify this by saying that I'm not a professional trader. You were formerly a professional trader, but just take this like from my sort of retail perspective. I will also somewhat disclose that I'm not an investor in Lighter, but I was a pretty early user and I thought it was a pretty good product. With that said, I'm not the person to ask about perp DEXs, right? Like I played around with all of them, but I don't think I have an edge trading perps. Okay. So usually when I'm messing around with them, I'm largely gambling. So a lot of this stuff like is functionally very similar to me. My first view was, oh, okay, like Robinhood offers 0 fees and it works, obviously. So like it makes sense that we could do this in DeFi. The next kind of counter argument I heard from some smart people who do generally know what they're talking about was, okay, the difference with Robinhood is that they sell order flow and it never hits a public book, right? Whereas with Lighter, it all is hitting a public book. And so their argument was, well, what happens when, you know, it's being routed directly to the public book is that it gets picked off by, you know, toxic flow. Well, then, so that was the second interpretation I heard. The third was, okay, none of this matters. Like as long as you have enough retail trading and enough sophisticated market makers trading, it'll even out. And that you introduce this lower latency way, right, for people to access, like to have API access. And like, I think that seems, you know, a very reasonable way to monetize, at least for the time being, is that you have, okay, well, if you want faster, you know, connection, if you want to be able to place orders and cancel them faster, you pay for it. And then most of retail, like myself, who don't really know what execution we're getting anyways, and we're not, you know, doing HFT or like medium frequency or whatever it is, like it doesn't matter for somebody like me, right? And it seems like so like this argument's been going back and forth, but I think that I've kind of come around to, at least from what I see, that like there's a bunch of different models that can work, and that one that you guys are pursuing certainly could work. Just in general, like what do you think of like these different perspectives, like the pushback, and then like maybe your arguments, like where do you see Lighter falling?
Right. Yeah. We've heard a lot of these perspectives as well, and even internally, like before we rolled out the fee structure, there was a lot of debate on our team about it, and as well as from, you know, early traders and kind of other, like you said, like smart people we talk to. And yeah, you're right, like there are people who have different views on this for sure. Well, one thing that's been interesting is and surprising, like some of the people we've talked to who've been the most supportive of this fee model are actually the trading firms who you would think would like profit less from it. But they, like some of the trading firms we've talked to, without, you know, naming names, have actually been like quite supportive of this trading, of this fee model, right? Because I think they understand, right? It's like, if you make life easy for retail, that'll grow the pie much higher. And like, as long as like retail, as long as it's growing, right? Like that, the trading firms, like long term, will do better if they're on the platform. that has the highest adoption by retail, right? So they've actually been,
Yeah.
again, different opinions, but that's been, and we actually thought we'd kind of have to like drag them kicking and screaming to this fee model, but actually that wasn't the case at all. Some of the biggest trading firms were quite supportive of it. I think, yeah, like the argument about like, well, Robinhood, I think it is true that it's not exactly the same thing as Robinhood, right? And the on-chain version, like it is a bit of a, I think for one thing, the reason Robinhood is structured the way it is not, is because like there's certain things like we talked about regulation of, what DeFi would look like, but like in TradFi, there are very established rules for that. And there's like, they're very, they spend a lot of time like on compliance and figuring out exactly how to structure things that achieves their mission while being, compliant, as, they've been kind of registered as a broker dealer for many years. So there's like a specific way in which they do it. And if you apply that exact structure to DeFi, it may not work. So I think those people have a point, but that's where, I think for us, it's more like reasoning by analogy. We're not applying that exact structure. Right?
Yeah.
And there are things in DeFi that are different, where you can have like Sybils and you can have different types of attack vectors if you just like approach the problem without, understanding the nuances of DeFi. So I think if you take the argument literally, like let's just copy and paste exactly what Robinhood does apply to DeFi, like I think the people who say that won't work are probably right, but that's not what we're doing though. It's more of like a conceptual analogy.
Yeah. And then sort of in the same vein, I've seen recently a lot of different approaches to like this idea of total cost of execution. And there's like a there's some, I think, dashboard that shows the slippage, fees, and the idea is to like try to standardize across perp DEXs. Is this, first of all, is this a good metric? Like, are we looking at this the right way in terms of total cost of execution, and sort of understanding what, spreads, like what people are actually paying? Is this the correct way to look at this? Because it is a bit different, right, than like what you were just alluding to with in BBO or like reg and like the different, things in TradFi that are very much regulated and you may have to execute at a certain price. Some of these things don't matter. So I think there is more of an attempt in DeFi. Okay, can we standardize this across the board? Is this in your perspective, like, is this a reasonable way to do this?
Yeah, I mean, even internally we track like our spreads versus other exchanges, both centralized and decentralized. If those numbers look way out of line, then we take a look and see what's going on. Obviously, like it's not like we just decide to spread it. A lot of it is like at this point, LOP is actually like less. It's not the majority of the liquidity anymore. So, but who knows? Like if there's something really weird in a certain market, like maybe there's something going on in that market that we should be aware of at the protocol level. But anyway, so that's data we look at. I mean, I think it's a hard problem because, like, for example, right, like maybe, like you can say, well, the spreads are higher over here, they're higher over there, but then like, if you use a TWAP and space out your orders, and like as soon as you execute the first one, a market maker reposts the offer, and you can actually get the overall fill at a much better price than if you just execute a market order. So like I think like I don't think there's just like one metric you can look at and say, okay, this market has better cost of execution than another market, right? Like that's why like in TradFi and even in DeFi, that they're like their entire businesses whose job it is to like move large volume efficiently. And so yeah, like I think like top of the book is important, like looking at some snapshots and averaging them out, like what does it look like to get in for like $1 million, what does it look like to get in for 10 million? Like those are all important, but it's like, but again, it's not necessarily like someone who is moving large volume isn't necessarily just doing that all as a market order. And so
Right.
you kind of just let at the end of the day, you just need to let the market decide, right? Like if there's more, like people will feel it, right? Like if they're spending less money trading somewhere, like they'll feel it and they'll move more of their business there.
Yeah. In terms of, okay, so you have free perps, zero fee perps and zero fee spot now. You do have these tiers, right, where you can pay for faster API access. In terms of going forward, are there, so I think one thing is that Hyperliquid set sort of this precedent where, one, there's a demand for revenue, which they've done, all things considered, they've done a really good job with their buybacks. And, there's sort of this, like, I think somebody described it as this, mutual understanding that they are going to, buy back this token and they're going to, with the fees, right? But what Hyperliquid has done is sort of set a precedent now where there's like somewhat of a demand for revenue, and the pendulum has kind of shifted, swung in the sense that now like a lot of early companies that are very much like pre-revenue, but certainly like pre-net income, right, are being like forced in a way to explain how they're going to make money, which, to be fair, the history of crypto is a lot of things that didn't make money. So I think it's a reasonable ask, right, as we become a more mature industry. My question after that, like kind of long diatribe is, are there other ways that you would consider monetizing going forward? For example, I know Robinhood makes a lot of its money from options. In fact, that's where a lot of the money comes. I think people like don't know that their selling of order flow to Citadel and others is like actually kind of relatively small, for spot relative to their like options is like where they make a lot of money. Would you consider like charging something like a fee for options, or what other paths to revenue, not like holding you to anything, but what other paths to revenue have you like thought about, and maybe just for DEXs in general?
Right. Well, I think like the options example you gave, that's also zero fee, right? It's more like the firms like Citadel make more from it, and then there's more kind of passed on to Robinhood. But yeah, I mean I think in general like options are good business. I think to some extent, I think in DeFi, perps have served some of that need for high leverage, but I actually think this I think options, there should be I think like more emphasis on options in DeFi, right? And that's something we're going to look at more next year. Like one reason for that, right, is that I think options kind of give you a cleaner, like with options you don't have to deal with the whole ADL issue, right? So like it's a bit cleaner that way. Also, like depending on the asset class, there are a lot of retail traders who, depending on, right, like I think we know in some geographies, like options like are very big markets, and so I think that's a big one, right? I mean, as far as like other ways to monetize, I mean, I think like in general, right, like we feel like it should come from professional trading firms who are trading as a business. And now whether which asset class that is, right, I mean I think there's like, you can think about things like on-chain hedge funds, right? Like there's a lot of different financial products that that can be on chain, right? Like even like I mean LLP does not charge an operator fee, but you can imagine other pools that do. Like maybe there's a pool that does basis trading and it charges some operator fee. There are things like that. So but I think in general, right, like there's so many different things to build, and I think like where that's really our focus, and we're confident that obviously we want to be like, in a strong point when it comes to revenue, but I think we're kind of already like, now we feel pretty good about our position where we can experiment with a lot of different products, and it's not like, I mean, I think you're right. Like, so some in the past, right? Like, some protocols have built a lot of stuff without much monetization to show for it, and
Yeah.
I think we're in a much healthier spot than that. But we like, ultimately we are going to build new things and experiment, and some of them will lead to revenue and some of them won't. But like, I think net, we know that TradFi has many different sources of revenue, and we know that as kind of TradFi and DeFi merge, that opens up a lot of possibilities.
Like mentioned before, right? There's like all these perp DEXs, they're all running points farming campaigns. One of the things we've noticed in the past with both perp DEXs and just almost all crypto projects in general is a massive, apparent traction, product market fit, pre-token, and then a precipitous drop off afterwards. Now, I'm not saying this is the case with every protocol, but we have seen this time and time again, right? How do you think about user acquisition post TGE? Like, you have a token in the near future and then going forward, right? Like, how do you personally think about maintaining traction, maintaining the hype, sort of, obviously, like you talk about, continuing to ship products, but just like in your mind right now, you have this token coming up, and then it's sort of like after that, right? It's like when the dust settles, it's like, okay, how do you view continuing to capture users and just continuing to gain traction, like for Lighter as a whole?
Yeah, I mean, I think certainly building new products and new asset classes is part of it. I mean, like partnerships, right? Like, we already have, there are a couple of other products now that serve as a front end for Lighter. I mean, there are a bunch of others like that in the works as well. Kind of, some of the integrations as well, but also the mechanism of traders earning points that convert to upside. I mean, that doesn't have to end now either, right? Like, there can be further seasons. I mean, those can focus on new products. That seems like a mechanism that works well in general. And I mean, yeah, it does. It's not perfect, right? Like, it can. There's some like Sybils and other wash traders. I mean, that's kind of part of it. But I think net it's still a good mechanism, right? Like, it gets traders. It's like Robinhood for we're obviously big fans of, right? But like, early Robinhood traders didn't get stake at the IPO, right? Like that's one of the great things about crypto, is that there's this alignment between early users and and the team and the early backers, right? So like, from our perspective, that the flywheel will continue. There will be incentives, kind of future seasons, other forms of incentives. Like, I mean, the other thing to think about, right, is like centralized exchanges still have more more volume, more fees, more overall activity than decentralized exchanges. And they certainly don't have the people who are there aren't like expecting a big airdrop. So
there's probably market fit.
Yeah. So it's not like, so I think at this point, like, the best products in the decentralized part of the market are like, are at parity or stronger than many of the centralized products, right? So like, I think that's where a lot of the addressable market is going to come from as well.
Yeah. I saw you mention this, but I saw you mention this on Twitter, but I thought I'd just go ahead and ask there. And you also talked about this in this podcast you did, but there was some sort of discussion about the equity of Lighter and the token of Lighter, and there, I think again, Hyperliquid really set a standard. Now, whether or not everybody should be held to that, and whether or not that is even like necessarily the definitive path forward, I think that's debatable. But the fact of the matter is, like, I think a lot of people were really like, there's this immaculate conception thing with Bitcoin that people say it's like sort of this religious zealot idea, but there was in a sense the same idea with Hyperliquid, where like all of a sudden, I wouldn't say all of a sudden, but there was something really powerful about buying back the token and saying like, this is what you own, and it's very straightforward, right? And they financed the project themselves, and they did this massive airdrop. And I think that like the same question like would, or the same, a lot of Hyperliquid people are asking the same of the lighter token, like, can we be confident that this is going to have the same property rights? I don't want to say equity necessarily, but ownership rights that you would see in Hyperliquid, and then a few other decentralized protocols as well. Like, is that, can we be confident that like the same sort of it will look the same as something like Hyperliquid going forward, the token specifically?
Yeah, I mean, there's no I don't think any one project has like a monopoly on having good tokenomics, right? Like, I think whatever approaches kind of make sense to benefit the community will follow those approaches or innovate on top of them, right? Like I think the fact that I think some of the questions that came up were more around like, oh well, there's equity, but I mean that's kind of beside the point. Like, I think it's at the end of the day, it's up to the core team on how to decide where the value is going to accrue. I mean, obviously there's some cost of operating the DevCo, but like beyond that, it should kind of all go to I mean the whole point of having the community and the team and the investors on one token cap table is that there'll be kind of incentive alignment across all of them, and that's where the value will accrue. I mean, that's kind of the whole, like, otherwise why would you do it in the first place? Like,
well, I mean, look, I agree with you ideologically, but I will say there's been, in the past, there have been a lot of projects and protocols and applications that haven't necessarily followed this path. So, I mean, it's great to hear you think like, okay, yeah, this is so obvious, right? And I think that crypto in general is moving to a place where, yeah, it should be so obvious, right? Like the token confers rights or, some form of ownership as similar as possible to, equity or a security as we can say for the time being, right? Like until we get full clarity on what these things are.
That's
but
right.
I think it is a reasonable question for two reasons. Again, we've seen a lot of protocols who really, like a lot of projects in the past who have done some sort of weird things with how these things are structured. And then obviously Hyperliquid came along and did set this precedent, and especially because you're competing in the same domain, right? I think that's like very reasonable question from a lot of people. But of course, like it is good to hear you be like, yeah, that should be obvious, right?
Right. Yeah. I mean, I think there are also a lot of other projects that did it the right way too, right? I mean, I think there's like, I guess there's like, again, this is maybe like back to the point about how like we started somewhat late building, so maybe we don't have all like the battle scars of
Uniswap or something like that.
Yeah. But and I think there's I guess there's like a certain degree of like skepticism in general, right? Like I think we'll obviously, like, we don't want to, like, once we have an announcement to make about exactly what how like there's going to be something kind of meaningful to say about how we think about tokenomics, right? And I think when we make that announcement, things will be a lot more clear. But I don't think anyone in the community should expect any like surprises there that'll be disappointing to them. Like, because again, these are no.
I mean, like, again, it's like, it's great to hear this, but I will say, you you come from like AI and trading, and you, like you said, you don't have these battle scars. And I think a lot of people have been scarred, right? Like in the past with a lot of this stuff. So as crazy as it sounds, it's not like an unreasonable ask, from a lot of people who've been in crypto for quite some time. Also on that note, will you publish or explain revenue and, current like fee structures with the token, right? Like, because in some ways, like you want somebody to come and buy the token, they want some understanding of how it's like, how you're pricing the for example, the API access or other paths of revenue in the future. Like, when can people sort of expect this? Again, we don't know what the token is, but like, will this be something that people can reasonably look at and say, oh, okay, like this should trade at, 30x or something, right? But right now, like, we don't have such a robust understanding yet, which is fine. Again, I'm not like criticizing you. I'm just saying, like, we don't have these numbers yet.
Yeah, I think we're in terms of like publishing the revenue and getting, there are a couple of kind of things that we're gonna make public kind of in the next week or two, right? Including that also, some of the for example, like audit of the spot, right? Like the other things that are gonna made public that I think will certainly the market expects, and we're gonna deliver. So yeah,
that's good. All right, the last thing I was gonna ask you about is, I think that sometimes from what I see, like the interactions on Twitter, sometimes I think that people. Well, there's a lot of people screeching all the time, right? And you're getting screeched at. And I think sometimes people think your responses are like a little bit curt, a little bit direct. One thing I'm curious, like coming from AI, coming from trading, have you been like taken aback by, the e-beggars as they're called, right? Like these people, like, were you taken? I kind of asked you this at the beginning with regards to like the hype around the project, but now I'm curious, like having to deal with these people on Twitter. I think sometimes, your responses are a little bit, acerbic, or maybe at times like even comes across a bit flippant. Like, do you feel this way, or like, do you have a different perception of how you're kind of like interacting with people?
Right. Yeah, it's. I mean, I think like I had a little bit of experience with this. Like I mentioned, I was at Core in the early days, right? And both kind of
you gave all the responses.
Yeah, right. I mean, both as a member of the team, but also, like a pretty active writer, and it's a little bit different, right? And it's more like long form, but yeah. I mean, I think sometimes like just having I think just kind of having like a snappy response versus like, versus actually going point by point, and because these these debates, you can like, especially like if you're like, I think it's one thing in a conversation like this when you're actually asking like thoughtful questions. Another thing if someone is like not debating in good faith, and then I think sometimes the best response is just like something more snappy. But yeah, I mean, like, I think it would be nice if the only content we could focus on was like about the product and about the tech and about markets, but with all this other stuff, I guess you just kind of have to take, to kind of take all incoming fire, and it seems like what we've been doing so far has been working. So
yeah,
like,
I mean, I think that also like at the end of the day, people are going to screech, but like you said, the product should ultimately speak for itself. So it doesn't really matter if you continue to gain traction, you continue to gain users, right? And so I don't think that it's like a huge deal. I have found it funny how sometimes you kind of are just, a little bit curt, and I understand that what you were saying with regards to like a thoughtful conversation versus people just kind of nitpicking. Sometimes I think the points are fair, right? Like I think that people do have legitimate concerns at times, or are like genuinely interested in being educated. But yeah, like also when you do, like, the beauty of crypto being that you can reward early users is also a drawback in the sense that you have to maybe deal with a bunch of e-baggers at times, and it's like you want to build a product, you don't want to deal with these people.
Right. Yeah, for sure.
Yeah. Okay. Well, Vlad, this has been fantastic. Okay, can you give us some alpha? I heard you like any timelines, anything that you can talk about. I mean, like again, probably the most hyped token launch and maybe the savior of Ethereum. That's what a lot of people are calling you. the Jesus of Ethereum. Yeah. When can people expect at least some, like, I don't know, give us some alpha to all the massive lighter shills on Twitter that I see. Give us a teeny bit of alpha. I saw you say points to 100. So I know that's not legal advice or financial advice, but I did hear you say that. You got anything else for us?
It's like the markets, on Polymarket are like pretty efficient. I think it's hard for me to like.
I've been following them a little
alpha
bit.
On top of that. Like, I guess maybe that in itself is alpha, but I think those markets are pretty efficient, and it's not. I think there were some questions around like is it like insiders? It's like we're too, like, we're not even following these markets very much, let alone participating in them. But but I think the from the extent that we have seen them, like, I think both the Polymarket and the OTC markets are actually like pretty efficient, and so I guess I'll say that as alpha.
Okay, that's pretty good. Yeah, I've been following some of them, like, loosely, so that is great. Okay, well, Vlad, again, thank you for coming in and answering my questions. I hope I was hard enough on you, but it was fantastic. And yeah, hopefully we can do this in like 6 months, and we can talk about, post TGE. We can talk about, all the new products you've shipped. We can do another catch up. So I appreciate it. Thanks for coming on.
That would be great. Thanks so much.